Well, no, welcome to the Autumn Statement R&D brief run by Empowered. So we tend to try and do these after every statement. So the autumn statement, spring statement. Some are definitely more material than others, depending on the amount of announcements within the statement. I can assure you this is definitely a more material one. There's been lots of changes and proposed changes to the R&D scheme from Jeremy Hunt's speech sometime last week. And we'll try and relay some of that information in a bit more detail and help your companies to deduce what this means for yourselves. We'll do some intros to start with. We'll keep it very high level. So many of you know Empowered. We've been around for just over 5.5 years now. And what we do is we combine technology and R&D specialist expertise to provide you with an enhanced R&D claim experience. We've worked with almost 1,000 companies now across multiple years, successfully claiming back R&D credits for them. Within the people on the call, so myself and John Yeomans, so we'll do really quick intros. So I'm head of Glennon, head of customer client success here, and oversee the whole claim delivery team, which includes R&D tax specialists, technical narrative drafters for the projects that you're claiming for, accountants who prepare the final submissions, and customer success managers who help guide you from end to end of the claim process, from onboarding all the way through to the successful payout and benefit receipts from HMRC. Got John as well. I probably can't do you justice by introducing you, so if you want to.
Yeah, I'll introduce myself. Thanks, Max. So morning, everyone. I'm Jonathan Yeomans. I'm the head of tax here at Empowered. I previously worked at HMRC for 32 years, I think it was. When I left HMRC, I was the project board lead for corporation tax inquiries, leading a team of tax inspectors who were dealing with inquiries into corporate intangibles and research and development tax reliefs, amongst a few other different areas. So I've been with Empowered for nearly a year now, I think. Everyone.
So just some housekeeping stuff on like an agenda and timescales. So we'll try and make this no longer than 45 minutes. I appreciate you're likely to be very busy. If you do need to drop off, it is recorded, the webinar, and do feel free to drop in questions into the chat throughout. We won't answer these until the end, just to keep the flow and timings on schedule. We'll definitely answer the more general questions, but in the time that we have. If there's very specific ones based on your company scenarios, we'll take them offline and contact you directly shortly after the webinar. So it's going to be broken down to 7 points, and the first one being a very quick recap on what R&D is for tax purposes. This is by no means like an educational webinar, but it's important to get that grounding of what R&D is for some of those companies that might not claim before. Then we got the new announcements that were shared last week, with some more immediate changes, but also longer term plans. And then we'll dig into some of the rate changes that have happened or will happen in April to the specific 6 schemes, so the SME scheme and the RDEC scheme. These aren't the only changes. There were some previously announced changes in spring and also in the draft legislation in the summer. So we'll resurface those to keep them front of mind, and if any of those have changed. And then we'll talk through the anticipated timelines for not only the new announcements, but the previously announced changes. And then, as always, yeah, any questions at the end, but we'll do our best to answer them. So, John, yeah, if I pass over to you, you want to do a high-level summary of what R&D is for tax purposes?
Yeah, sure. Thanks, Max. So we'll just start with a quick recap on the R&D scheme. This isn't going to be an R&D training session. We have different resources available for that, but always good just to frame things before we start, just to kind of remind all ourselves what the criteria is for companies to claim under the R&D scheme. So we've pulled up one of the definitions there from HMRC. There's various different definitions out there, but essentially they all contain the same elements. So we're dealing with companies who are seeking to achieve an advance in science and or technology, and in order to achieve that advance, the company faces some challenge or uncertainty that they need to overcome. And in order to overcome that uncertainty to achieve the advance, they have to indulge in some kind of methodical experimentation to overcome them. So that element would generally be the qualifying R&D activity, overcoming an uncertainty. And the last couple of words on that definition: competent professional. So all of this is seen through the lens of a competent professional. So there should be somebody, and that means with experience or qualifications in the industry, who is involved in your R&D project in order for them to be able to assess what is the existing baseline, and it is what you're seeking to achieve, going above and beyond that, and is the challenge more than just a trivial challenge, something that requires iteration to overcome. So yeah, that's essentially the definition. But if you want to read more on that, there's links on our website to the HMRC manuals, the CURD, and section 81900 is really the Bible for whether or not an activity qualifies. So always encourage companies and clients to make sure they keep themselves familiar with that. And the other thing, just to point out on this slide as we go into the next slides, that the R&D scheme is broken down into two distinct areas. So there's a scheme for small and medium-sized enterprises, SMEs, SMEs, and there's a scheme for large companies, which is the RDEC scheme. So we'll be talking about those two different schemes. Obviously, a small company is one with less than 500 employees, and turnover of less than 100 million euros, or a balance sheet figure of less than 86 million euros. So if you're not an SME, then you're large. But also worth mentioning that SMEs can, in some circumstances, claim under the RDEC scheme, and we will talk about that later on. And both the schemes can result in a reduction in your corporation tax or a payable cash credit to you. So yep, just worth highlighting that, and I think we can move on to the next one then, Max.
Thanks, John. So yeah, we'll go to the new announcements from last week, and some of the more immediate changes. So yeah, as John mentioned, there are two schemes, the SME scheme and the RDEC scheme. They're both impacted in very different ways, actually. The SME scheme has had a lessening on the amount of companies can claim back. So on the left and middle slides, you've got the 130 SME R&D enhancement rate has dropped down from 130 to 86%. Similarly, the SME tax credit rate has dropped from 14.5% to 10%. And they're quite big percentage decreases, which John will chat about more in a minute in specific cases. On the flip side, though, the RDEC rate has increased quite significantly as well, from 13% to 20%. So yeah, SME has gone down, RDEC has gone up.
Yeah, that's a big headline, Max, and the autumn statement last week in terms of its impact on the R&D scheme was really just talking about the changes to the rates, and those changes were quite dramatic, and we were anticipating a move in these two different directions, for the SME scheme to probably get less generous, and for the RDEC scheme to get more generous. But obviously we couldn't put numbers on it till last week. So these are the numbers in this slide. So what we tried to do is frame the changes from the perspective of a company that's spending £100,000 of qualifying R&D expenditure. So and I'll explain some of these terms as I move down the slide there. I can see some questions coming through on that. So for an SME, they can either use the R&D reliefs to reduce the amount of tax that they pay if they're profitable, or if they're loss-making, then they can convert that research and development element into a tax credit, a payable cash tax credit. So for a profitable company, currently, The enhancement is 130%. That filters down to a reduction in your tax of just under 25%, so 24.7%. After these changes, so from April 2023, the net benefit will be 21.5%. And that takes into account the fact that the corporation tax rate is also going up. So we've got some rates going down, some rates going up, and the net impact is that it goes from 27 to 21.5%. So overall, that's a reduction there, as you can see, of just 12.9%. More of an impact on companies who are converting their losses into a tax credit. So previously, every pound that you spent on R&D was worth 33.35% in terms of a cash tax credit to you. After these changes are taken into account, the net benefit will be 18.6%. So quite a significant drop there. So you can see the impact in terms of pounds here that might have on a company. So that's a reduction of 44%. We're going to dig into some of these scenarios in a bit more detail in a moment. Finally, the RDEC rate, so research and development expenditure credit, primarily applies to large companies, so companies with employees over 500 generally. But SMEs can also claim under the RDEC scheme if they are doing contracted work for large companies, or if they have subsidized expenditure. So grant funded R&D expenditure will fall under the RDEC scheme, and that's getting a lot more generous. The headline rates increased from 13% to 20%. And because RDEC is a taxable credit, it's what's called an above the line credit. It features in your top line of your profit and loss account. After that tax is taken into account, the net benefit has jumped from just over 10% to 15%. So quite a big increase on the RDEC rate. So as I say, we'll dig into some of these scenarios in a bit more detail on some of the later slides, but these were the big headlines from last week.
So there were the more immediate changes, as John mentioned. Now we have some longer term plans to talk through. So if you're an SME, it does sound like a bit of doom and gloom now, doesn't it, with your R&D rates being cut? Maybe not so much for the larger companies where the schemes become more generous, but all in all, there is a very strong continued commitment to R&D, and the overall R&D budget hasn't been cut. The government does realise the importance of innovation to continue growth in the UK economy, and to put that in numbers terms, so they're still aiming to increase their R&D spending to around 20 billion by 2024, which means they need to increase that by 5 billion on current levels. This is the overall R&D spending in the economy. Remember, the R&D tax credit is only a portion of this, quite a big portion, but just a portion. I'll pass this on to you, John, to think, yeah, what does this mean more for the R&D scheme in the future? How are we seeing that panning out potentially?
Yeah. It's good news, essentially, that the government's reaffirmed their commitment to R&D tax reliefs. What we saw last week was a rebalancing of the distribution of that reliefs. So a movement from one scheme to another to a large extent, and that's being driven by certain factors within the R&D scheme. So studies show that the RDEC scheme brings greater spillover benefits than the SME scheme in terms of being a catalyst for further R&D investment. And the difference between the two schemes is quite dramatic. Obviously, we've seen some of the press as well about fraud and abuse within the R&D schemes, and studies have shown that is focused more on the SME scheme, which results in a higher percentage cash credit than the RDEC scheme has. And I guess these factors have fed into this rebalancing. But overall, the commitment is to increase R&D spending over the medium to longer term, and for the net benefit to continue to increase. So the distribution may change, but the commitment to R&D funding for companies in the UK is still very much there for the medium to longer term. Yeah, I can pick up this one as well, Max, if you want. So one of the so we saw some rate change announcements in the budget in the statement last week. One of the other significant announcements that was included in the Green Book that was published along with the autumn statement was that the government intends to merge the two schemes at some point in the future. So that's their aspiration, that's their direction of travel. They said that they would be looking to consolidate the SME and RDIC schemes in the future, but before that happens, they will be consulting with companies and impacted stakeholders to see exactly how that future single scheme might be set out, organized. They've said that they want it to be an RDIC-like scheme, so they've said that they're assuming that the RDIC scheme will probably be the feature of any scheme in the future. But there was a clear statement of intent there, I guess, in the budget that or in the autumn statement that that's going to be the direction of travel at some point in the future. So something that we were talking about in our spring statement webinar, we've been kind of predicting and focusing, and this was probably on the cards. We haven't got a date on this, but as I say, that was quite a significant thing for them to actually put in writing.
Mm-hmm. I think similar to what we did in the summer with the draft legislation changes, we formed a response to HMRC on that. But before doing so, we spoke to quite a few clients to get their thoughts on it, which fed into our response. And I think we're keen to continue that moving forward, because we want your voices to be heard and fed back into HMRC moving forward. So when the moment comes, we'll be reaching out to a group of clients again. So you good for this, John? Yeah, deeper dive.
Yeah, sure. So we said we'd do a bit of a deeper dive into the impact of some of these changes. So we're going to talk about that now. I think it's worth this is looking at where we are now compared to where we have been in terms of the R&D scheme. So this graph here goes back to 2020. Sorry, to the year 2000, in fact. So yeah, when I was starting my tax inspector training in HMRC, looking at corporate tax compliance, so way back when, and you can see that back in the year 2000, which is when the R&D scheme was first introduced, the headline rate of enhancement was only 50%. We're now looking at a headline rate of enhancement from April 2023 of 86%, but that's still higher than where it was for the first decade of when this scheme was introduced. So you can see that it was 50 and 75%. Yes, the conversion of losses to cash credits is a lot less beneficial now than it has been since 2015, but there's still a lot of value in the R&D scheme, and I think this graph is just a useful kind of point to just take stock that yes, it's reduced on where it has been since 2015, but there is still very much value in the scheme. So yeah, we can move on to some of the some of the examples now for the impact on companies from April 2023. So yeah, if you want to move on, Matt. So we've done some scenario examples here for different company scenarios, just to give you a bit of detail as to how this might impact in terms of how much money you're going to get from the scheme. So we've got an interesting example here that we start off with. So this is for a company who's loss making. That's an SME, and they've got an accounting period that's obviously 12 months long. But that 12 months, part of it is before April 2023, and part of it is after April 2023. But the accounting period goes from October to September. So right in the middle of that period, obviously, we've got these rate changes that are coming into effect. And the way that these rate changes will be actioned by a company in this situation is that they would have half the year sitting at the lower rate, half the year at the higher rate. Anybody with an accounting period that goes beyond 1st of April 2023 is going to be impacted by the change of rate from the start of that financial year. So in this case, we've broken it down as to how that might impact on the bottom line. And what you would do is you would look at the total qualifying expenditure for the accounting period, for the 12-month period. So in this case, we've chosen an example where a company is spending £1 million on qualifying R&D expenditure, total qualifying expenditure. And you would split that up, divide that up by the number of days falling either side of the 1st of April. So in this case, 182 days before, 183 days after. And then you'd multiply the proportion of total qualifying expenditure apportioned by the number of days over the year by the rates that were applicable in those periods. So you can see in the first half, that proportion is multiplied by the current rate, 14.5%. In the second half, it's multiplied by the lower two rates, the 86% and the 10% tax credit relief. So this neatly illustrates the drop in value over the two periods. So in the one, we're talking about relatively similar amounts of expenditure in these two periods because it's split in half. But the cash tax credit value in the first period is obviously a lot higher than in the second period. And the drop between the one and the two is that approximately that 44% that we were talking about earlier. So yeah, I know some people were wondering, do I need to front load R&D expenditure before these rates come in? If I've got an option to do that, should I be spending my money before the 1st of April 2023? Well, if your accounting period is similar to this and kind of the change is just in the middle, then it'll be the money that you spent during the 12-month period. So there's no real financial impact as to when it's spent in the period. But I guess that contrasts with the next slide that we can move on to, which is the same situation for an SME loss-making company who spent £1 million. In this scenario, all of the accounting periods, that's after April 2023. So all of the expenditure for that period is going to go under the lower rate. So it all boils down to a net benefit equal to 18.6% if they're taking a cash credit. But in this scenario, if you've got 1 year ending before April 2023 and a new accounting year starting after that, then if you've got a choice as to when you spend your R&D expenditure, if there's flexibility around that and you anticipate spending it in the next 6 to 12 months, then you might want to consider making that investment before the changes reduce, because that will obviously be more financially beneficial for you. But ultimately, that will depend on the facts and circumstances in your company. But yeah, a couple of examples here that illustrate the impact, and I think we're going to be also making these available for you to scrutinise in a bit more detail after the webinar for those who registered. So that's the impact for an SME company. So you can see there the change in benefit over that period. The next couple of slides are talking about the impact for a company claiming under the RDEC scheme. So as I said earlier, this is predominantly for large companies, this scheme, but it can also apply to SMEs who have subsidized expenditure or are doing contracted work for a large company. So again, we've got a scenario here for a company who's got an accounting period that straddles that 1st of April change in rates. So you can see from this illustration neatly that the first half will all be at the current rates. The second half will all be at the increased rate. So again, you can see that the benefit there is increasing quite dramatically, and in line with those first few slides, more than 40% increase on that cash benefit under the RDEC scheme. And then the last slide here just deals with a company claiming under the RDEC scheme, but everything is going to be under the new rates. So in this case, the net benefit would equate to 15% after tax, because the RDEC credit is a taxable credit. So the before tax figure was 20% to £200,000. on a million investment, and the after-tax figure is 15%. One other thing that came out in one other factor that came out in the CURD was updated this month as well, to take account of these changes, that the RDEC is taxable at your headline rate. So if you're a marginal rate taxpayer, obviously we're going to see rates for a lot of companies increasing from 19% to 25% from April. But not every company will go from 19 to 25%. Some, because the rates from next year are going to be banded. So some companies will continue to pay at 19%, some will pay at 25%, but there'll be a margin between those with profits between 50 and 250,000, where there'll be a marginal rate. So the RDEC is actually going to be taxable at the marginal rate, which was an interesting concept, and that's in the CURD. But I think we're getting too much into the weeds there with RDEC. We've got more information about that on our site. But yeah, some slides there to give you an idea of the actual impact in terms of how much money or the change on the rate. But you can see there the RDEC rate going up quite significantly.
So I guess the RDEC rates increased, but it's been slightly offset by the rise in corporation tax.
Yeah, definitely. Yeah.
Cool. So we have some. Yeah, these are that was a summary of the announcements in the autumn statement. As mentioned at the start, there were announcements in the spring statement and also during the draft legislation within the summer. The headline one, which at least there's a lot of software-based companies can benefit from, is that all cloud computing and data costs, as well as pure mathematics qualifying activities, can be included in R&D claims beyond 1st of April 2023. So what does this mean? In reality, it shows that HMRC are trying to keep up with the times and how companies are innovating. So a lot of the data-heavy research in the cloud is now being acknowledged. So you'll be able to claim, they're broadening the scope of that. You'll be able to claim for more of those costs and activities in the future. As a general point, the rates might be changing. So they are changing. They're lowering for the SME scheme and increasing for the RDEC scheme. But the overall pot of total qualifying spend is also that opportunity is increasing if you do have these costs that you incur as a company. So cloud computing and data costs and pure mathematics, they're extending the definition of qualifying activity, which is a really positive thing, and they're adjusting to how R&D is happening within companies these days. So we're seeing that as a very positive sign. In terms of the other announcements, there are announcements on overseas contractor costs. I might pass on to you, John, to give a bit more detail on what it means and some of the potential exemptions that might apply.
Yeah, sure. So this has been a long time coming. There was no change of direction announced in the autumn statement. In fact, the refocusing of costs towards the UK was mentioned in the OBR figures that accompanied the budget, or the statement rather, last week. So from the 1st of April 2023, companies that are doing research and development outside of the UK will be obliged to only claim for activities that take place in the UK, where we are talking about subcontractor or EPW expenditure. However, that comes with a list of exemptions that will still allow you to claim for those costs, overseas costs, if the reason that you are doing that activity outside of the UK is because it is not possible for you to achieve the same outcome, or not even possible for you to start doing that research in the UK. So, for example, if there's geographical or environmental reasons that mean that you have to do your research and development outside the UK, if you're developing deep ocean research, submarines, or doing some kind of desert, new or desert or all-terrain vehicle or something that you're developing, obviously you need the environmental conditions that don't exist in the UK in order to test those new technologies. So in those circumstances, you would still be able to claim for those costs. As I say, no change of direction on that in the budget, and the big thing that we had in the draft legislation published in July was that if the reason that you're doing this activity overseas is essentially because it's cheaper or because you can't get the availability of workers in the UK, you can't get the staff, then that's not a valid reason for an exemption. And we fed back on the following the draft legislation published in July to say that we thought that needed to be a bit more nuanced, that there could be circumstances where the skill set just didn't exist in the UK, and that was the reason that you had to undertake the R&D abroad. We're still waiting for the government to respond on that consultation, but no change of direction announced last week. And the measures to combat abuse, again, these have already been on the books for a while, but again, nothing last week to say that there's any change there. So there will be new measures coming in from April. Companies will have to put the name of the agent who's advised on the R&D claim on the claim. Will be doing that on our platform, obviously, and we're all for that. We think that that's great for there to be more accountability within the R&D advisor market. Companies will also have to sign off a claim, so that a named senior officer will need to go on the claim form for new periods starting after April 2023. And Jim Harrow was talking to the House of Lords Accounts Committee a couple of weeks back, saying that the reason that they're bringing that in is because they want there to be more personal accountability for the quality of R&D claims. So the government is certainly raising the bar in terms of the quality or the scrutiny of claims that they will undergo from next year, and nothing to change that direction, and a welcome direction as far as we're concerned in many respects. So yeah, there was also the pre-notification requirement for companies to notify R&D within 6 months of the end of the tax year. We have fed back on that, and we to government that we don't think that is achieving the objectives that it's set out to achieve, and it may actually mean that some companies may miss out. But again, nothing last week to change that direction. So yeah, I think we did this in the spring statement, Max. I think a lot of this, so we can probably move on.
I think the scheme where there is probably the most abuse is in the loss-making SME scheme, and we can see that that's where the rates dropped off the hardest. So probably see that as a signal from HMRC as well, beyond the more specific measures that they'll bring in.
Yeah, definitely.
So okay. Some anticipated timelines of everything that's been mentioned, really, if you want to rattle through those.
Yeah, I'll run through this. So I said there was no changes on some of these areas last week. From where we are now and from when these things are due to come in April 2023, there are some milestones along that journey that may influence the way that this is implemented from April 2023. Not around the rates. I think the rates are the first milestone there. We've got the financial bill from last week. It's already working its way through Parliament. It'll go through about 11 readings, including 3 in the House of Lords. But the change of rates is probably unlikely to see any change before that comes into effect from April 2023. However, we have currently got a House of Lords inquiry looking at R&D tax relief. So they've had about 4 sessions, I think, of with various witnesses that have been called to give evidence around the R&D scheme. And if you've watched any of the House of Lords inquiries, and sad person that I have, you'll see that they don't appear particularly keen on some of the measures that are due to come in terms of the refocusing of the reliefs solely towards the UK, the pre-notification requirement. They're not convinced about the rationale for the introduction of that, and they also think that HMRC should be doing even more to combat fraud and abuse within the scheme. So they will be reaching a conclusion on their inquiry at some point in the next couple of months. And you can guarantee, obviously, that they will be speaking and trying to the House of Commons. and trying to influence some of those areas within the legislation before it comes final in April 2023. As to whether or not that will have any impact, I guess we'll have to wait and see, but that will be an interesting development. We will also see a consultation launched at some point between now and April. That was confirmed in the autumn statement. And that consultation will be primarily focused on the merging of the two schemes at some point in the future. But it would also, I suspect, have some other areas around R&D reform that they want to consult with interested stakeholders about. So when that is published, we will have that on our website, and we will reach out to our clients to get your feedback, and we will feedback on that. We're also going to get the R&D regulations published at some point. So we've got primary legislation, which isn't going to come into effect until probably after the spring budget. But the R&D regulations are a type of secondary legislation, a statutory instrument. They'll have quite a bit of detail around things like the how the overseas subcontractor cost exemptions will work, what kind of evidence companies might need to retain in order to satisfy HMRC that they meet the exemption. Those kind of things will hopefully be set out in quite a lot of detail in the R&D regulations. Now, I doubt that we will have to wait until next March for those to be published. I'm hoping they'll be published this side of Christmas. But again, you know, a lot of these things are wait and see. We haven't got dates as to when these things will be published. We will be attending an R&D communication forum along with many other advisors and HMRC on the 7th of December. These kind of things, we might have more clarity on when these kind of things will be published. But you can see that there are some things there along the journey between now and next April that could potentially change the direction or influence the direction slightly. So yeah, we'll be watching with interest over the next few months.
Thanks, John. Well, hopefully that's given a solid recap on some of the changes that were announced last week and also earlier in the year. So yeah, high level overview with some more specific deep dives into some of the impacts on the specific schemes and how it might play out in the future. We've received quite a few questions throughout, and we've done about 40 minutes. We'll leave maybe 5 minutes to answer some questions. And as I said, if there are any we don't get through, we'll contact you specifically after. So the first one is, my accounting period straddles the 1st of April 2023. How will this be handled? I think you answered this actually earlier, John, in one of the middle slides. So what will happen, if your accounting period straddles April the 1st, 2023. So let's say the example is January to December, which is a very common financial year for companies. So the first 3 months of that financial period will be on the current rates. So 13% for RDEC, the 130% uplift, and 14.5% tax credit rate in the SME scheme. And then after that period, it will simply shift to the new rates, so the 20% RDEC and the 86% uplift rate and the 10% R&D tax credit rate. So yeah, there's that stake in the ground. Anything before that is current rate. Anything after that is the new rates. Anything to add to that, John? I know you spoke at that length.
I don't think so. If anybody wants to see the detail, it's in Corporation Tax Act 2009, Section 8 and Section 52, talk about the mechanism for apportioning your profits for when your accounting period is not coterminous with the financial year. But I think that's probably more detail than we need. But yeah, spot on, Max. Yeah.
I think simply as well, if you're working with us on the platform, it will, all those calculation rate changes will be ready for you when your accounting period starts, or when in the periods that are affected. The second question is, do the rate and scheme changes all happen at the same time? So I guess we've got to define what is a rate change and what is a scheme change. A rate change is what we were chatting about a minute ago. So the changes in the 13 to 20%, 130% to 86%, etc. So they happen, there's that time period, and anything before that is current rate, anything after that is new rate. Scheme changes are slightly different. They tend to be announced or come into effect from the 1st of April, whatever year it is. This year, obviously, it's 1st of April 2023. But the scheme changes will be like definition changes. So, for example, allowing cloud and data costs and claims, allowing pure mathematics. These happen for periods starting after or on or after the 1st of April 2023. So yeah, the changes come in on the same date. However, the way they impact your claims is slightly different. So the rate changes will happen within the claim period. You'll be impacted directly if it straddles. However, the scheme changes will happen for periods starting after the 1st of April. Okay, anything else there?
No, yeah, as you say, we're talking about two slightly separate timing issues here. So yeah, it's as you say, Max, it is different. So you and the whole of the accounting period has to begin on or after 1st of April 2023 for the scheme stroke definition changes to take effect. So
sure.
So yeah.
And how do I make a pre-notification? So I think this is to do with the combating fraud within the scheme. Yeah, you mentioned you need to have the intention to make a claim. Yeah, someone's asking how do I make a pre-notification?
Yeah, I can say this, Max. So I guess the answer is we don't know for sure how you're going to do it. We still wait for those regulations to be published at some point over the next couple of months. I guess one thing to frame here, the HMRC does talk about this as being about pre-notification in their literature, but it's pre-notification of your R&D claim. So it takes place after your accounting period finishes, but before you claim R&D reliefs. Now, currently, you've got a 2-year window to do that. This proposed change is that you would have to tell HMRC within 6 months that you intend to claim at some future point, and then you would still theoretically have the 2-year window to do that, but only if you've pre-notified. But it only applies to companies who haven't claimed before in the last 3 years. So anybody on this call who's already claimed R&D reliefs currently or within the last 3 years doesn't have to pre-notify. So it's for new companies. As to how you do it, as I said, we'll wait for the detail. Tessa Robbins from HMRC was speaking at the House of Lords inquiry on Monday this week around this briefly. She said that it'll probably be digitally. HMRC will probably expect companies to give a bit of detail around the R&D activity that they're undertaking when they make that pre-registration, but it'll be relatively basic, and you'll probably get some kind of reference number that you'll then have to keep. But that's about as much detail as we've had so far. We'll just have to wait for more detail to be published on that, but probably it'll be a digital thing that may or may not be linked to your existing HMRC account. We will have to wait and see.
I'll do two final questions. It's maybe not linked specifically to the autumn statement changes, but someone said, I have a grant. Does this preclude me from making an R&D claim? The short answer is no. If you're an SME and you have a grant, or for example, Innovate UK, the costs incurred for that R&D project subsidised by the grant will fall into the RDEC scheme, or likely fall into the RDEC scheme. In relation to the changes in the scheme, this will actually become more generous with the increase in RDEC rate from 13% to 20%. So yeah, the short answer, if you have a grant, you can still claim R&D. If you're an SME, these costs will shift to the RDEC scheme, and it'll be more beneficial in the future.
Yeah, and one other thing on that, Max, the Chancellor spoke about additional investment in the Innovate scheme as well last week. So there was a figure of 2.6 billion over the spending review period, which I guess is up to 24-25, being invested by the government into the Innovate scheme. So that money will feed down into grants for companies who are undertaking innovation. So looks like there'll be a little bit more money out there in terms of the grants, and you can still claim for that under the RDEC scheme, as you say, but it will fall within RDEC. But RDEC is more generous from April than it is currently. So yeah, it reasonably good news there. Yeah.
Yeah, the increased innovation or Innovate UK spend just sort of underlines the government's commitment to R&D spending in the future. Then the final question, yeah, we're touching on almost 50 minutes now, so Yeah, John, you mentioned the schemes could potentially be merged in the future. So someone said, when do we think the schemes will be merged? I think we haven't got a crystal ball, but yeah, it's not a question of if anymore. I think this is very likely to happen. It's more a question of when, isn't it? So
yeah, we'd be speculating. I think a change of that magnitude is not going to happen quickly. They'll need to consult. Past consultations have taken about 2 years to kind of feed through from launch to introduction. I couldn't see that happening before April 2025, personally. Might even be longer. If there was a lot of desire movement, it might happen sooner. But I'd guess you're probably talking about a 2-year lead-in. Definitely not going to happen from April 2023. The bill's going through Parliament at the moment. They're talking about 2 separate schemes with 2 separate rates. So, you know, nothing's changing in the very short term. But over the longer term, yeah, seems like a direction to travel that is going to happen. I suspect they'll probably look to merge the schemes in terms of generosity even closer between now and that point. But yeah, we'll wait and see. But I would have thought a couple of years, 2-3 years probably. But you know, the commitment there from the government is for R&D investment overall to continue to increase for the medium to longer term. So you know, one way or another, R&D reliefs aren't going away for you know, a very long time.
thank you. So yeah, this now concludes the webinar. No, thanks everyone for joining. It's much appreciated, and as